Hello, everyone, and welcome to today's special investor briefing with Healthia CEO Wesley Coote. It's great to see we've got so many people online already. My name is Samantha Fraden. I'm from Principal IR, and I'll help Wes run the session today. I'll just run through a couple of quick formalities. So after the presentation, Wes will be taking questions from attendees. If you do have a question for Wes, there's a sidebar on your screen which says Q&A, where you can enter questions for Wes throughout the presentation. Any financial advice given in this presentation is general only and does not consider your individual circumstances. Since listing Healthia on the ASX in 2018, Wes has led the business to grow extensively across clinic numbers, revenue, profit, and headcount. Their most recent acquisition, which I'm sure most of you have heard of, is the Back in Motion Health Group, who runs 64 physiotherapy clinics across Australia and New Zealand. Once settled, it will represent a 170% growth in the Healthia portfolio since listing on the ASX. Wes has been very generous with his time for shareholders, and he has a busy day of calls ahead, so I won't take up any more of your time. Wes, I'll hand over to you.
Excellent. Thank you, Sam, and good morning, fellow shareholders, ladies and gentlemen. As Sam mentioned, today I'll provide an update on the Back in Motion acquisition, the equity raise that we've done off the back of that, and a little bit more about how the acquisition fits into Healthia's overall growth strategy moving forward. But to get us started today, I'll click firstly to this slide and go over the key highlights of the acquisition. What it will do, it will position us as the #1 provider of physiotherapy services in the country. So it'll take our existing portfolio from 58 physiotherapy clinics and take us to 122. It will expand our market into other geographical locations that we aren't in at the moment, and I'll show a slide in a sec which shows that we're very Queensland-centric in our physio division, and this helps to disperse us across the country a little bit more, as well as we enter into the New Zealand market with 13 Back in Motion clinics over there. Key highlights of the deal is that it will contribute revenue of 60 or nearly $63 million on an FY21 underlying basis, which is an increase on Healthia's FY21 numbers of 45%. Inside that revenue, the Back in Motion group has had really strong organic growth over the last year. As you would have seen in our release for our full year results, our organic growth was 9.1%. They've experienced 8% organic growth themselves over that period of time. And the transaction is EPS accretive for Healthia shareholders, so about 12% EPS accretion for Healthia shareholders on an underlying FY21 basis. So a little bit about the Back in Motion portfolio. So it was founded in 1999 by physiotherapist Jason Smith. So Jason is a physio, which, as you know about the Healthia model, we're clinician-led. Our founders of our physio, podiatry, optical businesses are still part of our ongoing management team here at Healthia and contribute to the success of us pushing forward. So as like the Healthia business, Back in Motion was founded by a physiotherapist and is clinician-led. So it ticks off that very key box of what's part of the success of the Healthia model. It's currently run under a franchise model. So from day one, we then transitioned the businesses to the Healthia model. So as most people may know, the Healthia model is a clinic class share model. So our clinicians alongside of us can still own a portion of their clinic. So inside their clinic, they can own a portion of the earnings of that clinic alongside of us through what we call clinic class shares. So in this deal, there was 64 businesses which represented different franchisees. So as part of the deal, we had to sit and we had to have the discussion with each of those individual franchisees, strike a deal that worked for each of those people as part of the process. And as part of the process, each of them remain as clinic class shares in Healthia going forward. So we'll transition from the franchise model to our clinic class share model, where each of the franchisees who are the key clinicians in each of their locations will remain as clinic class shares. So very important that they're transitioning to our existing ownership model, but they continue as owners going forward along the journey. It also brings with it an increase in the number of full-time equivalent clinicians we have on board. So it'll increase those numbers by about 300, contribute $63 million worth of revenue, as we previously mentioned, and take us into a few other markets that they've been able to grow into over the last decade or so. As I mentioned before, they've experienced good, solid organic growth in the last few years, and in particular last year, 8% organic growth, driven by similar things that Healthia has been doing that we've talked about, bringing through consultation fee averages, increasing our consultation volumes, growing the number of clinicians that we have in each of our clinics so we can see more patients, and diversifying into other services as well. So their organic growth getting driven by very similar activities that Healthia has been doing over the last few years. As I mentioned, it'll diversify us a little bit more across the country. So at the moment, Healthia is very Queensland-centric in its physio division, but the back in motion portfolio is largely in Victoria. So 26 of the 64 are in Victoria. So the business has grown out of Victoria. So logically, that's where the bulk of the portfolio is, with other coverage across the country. And you can see there with 13 clinics, so giving us an in into the New Zealand market. So 13 clinics in New Zealand under the Motion Health banner. So how does that fit into and align with what Healthia is currently doing? It slots nicely into our Bodies and Minds division. And what it does is it continues to strengthen us and push us forward to our aim, which is to be Australia's largest and most diversified healthcare provider. So as Sam mentioned at the start, we've seen an increase in our portfolio since listing 3 years ago of 170%. Last year, we brought in the Eyes and Ears division through the strategic acquisition of the Optical Co. This is another strategic acquisition that brings some scale into our Bodies and Minds division, which allows us to continue to leverage off and continue to grow from. As you can see there, heavy at the moment, on the left-hand side, we're heavy in Queensland at the moment with 50 of our 58 physiotherapy clinics here in Queensland. But this changes that. We go to 57 here in Queensland, but 28 in Victoria, and then full coverage across all of Australia with 13 in New Zealand. As you can see here, our revenue on an underlying FY21 basis currently is 91% in our physio division here in Queensland. Down the bottom, you can see that goes to 48, with 28% in Victoria, 9% in South Australia, and still only about 3% in the largest market in Australia, which is New South Wales. So it still provides plenty of opportunity for growth inside of our Bodies and Minds division, so that it doesn't take away from that component. And you can see here, we still have less than 3.5% market share in Bodies and Minds post-transaction. So still plenty of growth available in our Bodies and Minds division, and plenty of growth for the whole company with less than 2.5% of our addressable market across all of our segments. So what does the deal look like? You can see there, we reported underlying revenue for the year of 140 million. This transaction is to deliver nearly 63 million, so an increase of 44.8% over prior year. Underlying EBITDA of 21.5, up to 33.8, so a 57.5% increase in underlying EBITDA. And then we've shown there the underlying non-controlling interest line. As I mentioned, the businesses convert to our Clinic Class share model. So the existing franchisees who become Clinic Class shareholders still own about 1.6 million of the earnings, but the underlying profit to Healthia shareholders increases from 8.8 million to 14.7, or a 64% increase in underlying profit to Healthia shareholders. So post the capital raise, we see about a 45% increase in the weighted average number of shares on issue, which sees underlying EPS accretion of 12.7%. So it represents good double-digit EPS growth for shareholders moving forward. The transaction itself, on the 12.3 million of underlying EBITDA, represents about a seven times EV to EBITDA multiple, including support office. So there's about 2 million of support office costs in that 12.3. If we were to strip the support office out and just looked at the clinics, it represents about a 6 times EV to EBITDA multiple. So a good, a nice multiple the clinics have been purchased on. We've done a small capital raise, which we've done a capital raise off the back of this, which I'll get to in a minute. But it also then resets the balance sheet slightly as well. Our key banking covenant with the banks is debt to EBITDA less than 2.5 times. We've always remained around 2 times since listing. This drops us a little bit under that, as we're only taking on about $14 million worth of debt in this transaction for 12.3 million worth of EBITDA. So it does help reset the balance sheet slightly. Plus, we're taking on $7 million of additional cash for future acquisitions. So we've got a very healthy acquisition pipeline at the moment. We'll deploy this money to continue to grow the portfolio into the future. As part of it, we went back to the banks and we reset our facility with them. So we've upsized that facility from $70 million to $100 million. So we've got a $100 million facility with the banks now. It'll be drawn to $66 million post-transaction. So we've still got $34 million worth of headroom in that facility agreement post-transaction. Transactions funded by a capital raise. So the total purchase price for the acquisition of $86.5 million with $65 million of cash up front was funded by a recent equity raising. So the offer was $60 million split into 3 components. So a placement to institutional investors, an accelerated rights issue to sophisticated and institutional investors, and now the retail offer as well. So the total to be raised is $60 million. A key component of what's happening moving forward is the franchisor. Some of their consideration is left in Healthia shares. So nearly $5.8 million worth of value is left there for the franchisor. So vesting in the Healthia story going forward with a 24-month escrow period for those shares. And then, as mentioned before, the clinic class shares going to each of the franchisees represents value of about $16.1 million. So nearly a quarter of the value that was going to each of the franchisees has remained in clinic class shares moving forward. So as mentioned, we've completed the placement now for $22.3 million. So it was heavily oversubscribed, which is showing good interest for this acquisition and Healthia moving forward. So the shares have now been issued for that component of the raise. The institutional entitlement offer, so the accelerated rights issue, has also been completed, and the shares also issued on that component, which raised $22.2 million. And the retail entitlement offer is now open to eligible retail investors. So eligible retail investors can acquire 1 share for every 4.3 that they have, and that entitlement offer is open and closes on the 6th of October. So just quickly, the timeline for the retail entitlement offer, it's open now. It closes on the 6th of October. We'll announce the results of that retail entitlement offer on the 8th of October. Settlement of the shares on the 13th, with commencement of trading of those shares on the 14th of October. So in summary, this is the largest acquisition that Healthia has done since listing, $86.5 million purchase price. We're moving from a franchisor model into our clinic class share model. The franchisor is leaving $5.8 million of consideration behind in Healthia's shares. The clinic class shareholders are leaving about a quarter of their value in clinic class shareholding as well. We've completed the placement and the institutional entitlement offer to help fund the acquisition. We've upsized our debt facility from $70 million to $100 million to help fund the acquisition as well as future acquisitions. And we've taken on an additional $7 million of capital to continue to fund the acquisition program that we have on the go at the moment. Was there any questions?
Wes, thank you so much for the informative presentation. Expanding in the physiotherapy market certainly looks like a great opportunity for Healthia. I've had a few questions come in, so we'll start answering them in a moment. If anyone does have any more questions for Wes, just type them into the Q&A box on the side. We have some questions come in multiple times, or they're very similar, so I might couple a few in together as we go. So I'll get started from the list now. Does the BIM acquisition cap off the planned 20 million per annum acquisition spend, or is it independent to that with more acquisitions coming in FY22?
Yeah, look, it's independent to that 20 million cap. We still think and believe we will deploy the $20 million to future acquisitions. We've already announced a number of acquisitions for this financial year, and we're well on our way to that 20 million. And we've still got plenty, our pipeline of acquisitions is really full, especially in optical and in physio still. So we're still very confident that we'll deploy at least another $20 million of capital in FY22 on top of the Back in Motion deal.
Great. Another one here. Does the $9.8 billion addressable market include New Zealand? If not, what does it look like? And are you actively looking for other allied health clinics over there?
It doesn't include New Zealand. We couldn't get accurate data on what the New Zealand market represents. So we've just left that out. But yes, we definitely want to grow in physiotherapy over there, and we'd love to get into podiatry and at some point optical as well, because they're the three disciplines that we have here in Australia, and we see that we can replicate what we're doing here quite nicely in New Zealand.
Great. Next question. Are there material cost synergies expected from the acquisition?
Look, we don't like to talk synergies when we do our acquisitions. We didn't do that in the Optical Co acquisition, and we're not doing it in this one. Look, we haven't factored any in. That's the way the business looks today. So we expect to grow off the back of having more scale in our physiotherapy business. What it's doing is providing us with some efficiencies, and as we grow through that division. So look, we're not really talking to the market about synergies at this stage.
Great. Next one is, what are the organic growth expectations for BIM going forward?
Look, I think it's the same as with our other businesses that we've got at the moment. Their profile's been very similar. 8% organic growth. We've achieved 9.1 across the portfolio, doing very similar programs. There's still a lot of opportunity in the BIM portfolio, as well as the Healthia to continue to co-locate services such as podiatry. Look, we want to see 3 to 6% organic growth year on year going forward in our business.
Yeah, excellent. I've got another one here. How do we get the 50% bonus shares under the entitlement offer?
Look, I think it's part of the subscription process, and you subscribe for them, and if there's shortfall, then you'll be entitled to that 50%. So I think if you've got any more questions, I think Sam could probably answer them offline.
Yeah. People can just reach out via email. That's fine. That looks like all the questions that we had at the moment. So I'll wrap up here. Wes, thank you so much for your time. If anyone does have any further questions, just feel free to email them through. A recording of this webcast will also be made available shortly on the Healthia website. So on behalf of all investors in attendance, thank you so much for your time today, Wes. We really appreciate it.
Excellent. Thanks, everyone.